Hi, I'm Ron Cardozo with First Bank Mortgage. I want to kind of go over the pre-approval process with you really quick. Obviously, when you get pre-approved for a home loan, obviously credit is a big portion of getting pre-approved for a home loan. And credit is, you want to make sure that you've got the capacity, you've got the credit history, you've got the ability to repay that loan. There are several different loan products available for people with several different down payment options available. On a conventional loan for a first-time home buyer, there's a 3% down conventional. For a conventional person who's not a first-time home buyer, there's a 5% down option. For a VA borrower, there's 0% down. For a FHA borrower, there's 3.5% down. For a USA borrower, there's 0% financing available. So it really depends on your loan options. Depending on what type of loan you're looking at, there's several different loan options available for different down payments. So you're not required to have 20% down for a down payment. There's several advantages of owning a home compared to renting, and sometimes there's more advantages when you're renting compared to owning. You just have to look at what those advantages are in your own situation. Just think about that. When you're making an offer on a house, make sure that you are taking the steps that you need to make sure you're making a right offer on the home. So here's a couple different solutions to think about. Here's a couple reasons why you should own a home. You're building equity. You've got tax benefits. You've got stability. You're building up savings. So just and plus what your payments are going to be every year. The only thing that's going to be fluctuating in your payment is your taxes and insurance. Your principal and interest portion of your payment will stay fixed for the principal and interest portion of your payment. And here are 6 things to watch out for when you are buying a house. So just look at these things when you're walking around the house, just to be on the lookout for. Here's a quick little list of items that we're going to be asking you for, some basic information. Copy your driver's license. Maybe we'll ask you for your social security card just so we can verify your social security. Proof of your income, your last 2 years worth of W-2s, last 2 years worth of tax returns, last 30 days worth of pay stubs, and we want to know where your down payment's coming from. Again, here's a couple more things that we might be asking for. Proof of assets, proof of your credit, verification of employment, and proof of your income, which is your pay stubs and your W-2s. As part of the mortgage pre-approval process, we're going to be looking at your debt ratio, what you have coming in for your income and what debts you have going out. So if you have student loans, credit cards, car payments, child support obligations, whatever you have coming in compared to what's going out, we need to make sure that you can afford the house payment you're buying. And you really want to know the difference between a pre-qualification and a pre-approval. With a pre-qualification, somebody's looking at some generic information about you and saying, oh, hey, you can afford this. With a pre-approval, we're actually looking at your income. We're looking at your liabilities. We're comparing those two things to see what you can afford and make sure that you can afford it. We want to make sure that you have the money in or have the ability to come up with a down payment so you can close on that transaction. So I want to talk a little about how my process is with First Bank. First I want you to submit an application on my website, roncardozo.com. Then I'm going to have you, the reason why I have you do the application on roncardozo.com so I can get the e-consents out of the way. Plus, that will also give me the ability to know what your credit score is so I can run numbers for you that are accurate numbers. Once you submit the application online, I'm going to go ahead and pull your credit. I want to give you a call over the phone so I can kind of go over the application with you and make sure everything we have on the application is accurate. I'd much rather talk with you over the phone than text back and forth with you because, again, I want to make sure that we have accurate information. So once I've pulled the credit report, I want to make sure, I want to ask you for a sample address. I want to make a spreadsheet for you so I can run sample numbers for you. And I'm going to send you a spreadsheet. And on that spreadsheet, you can go in there, change your sales price, change your taxes. If you see any other houses, you're not tying yourself to that property. This is a sample house because I want to make sure you're comfortable with the payment on that type of property. Because if you're not comfortable with the payment on that property, now we need to look for a different property for you and find you a different house that you are comfortable with the numbers on, because that's the main thing. If you're not comfortable with it, we need to make sure that we're looking for something that you are comfortable with, because we're at the beginning stages of this process. So I want to make sure that you are comfortable with this, because if you're not comfortable now, you won't be comfortable at the closing table. Again, I kind of put this one a minute ago, is that I want to make sure that you're comfortable with the monthly payment and the cash to close amount. If you have to get money from another source for the cash to close amount, if you have to get money for a gift, if you have to get money from a 401k or retirement account, I want to make sure that you know what the money is that you need for closing ahead of time. So that's why I make the spreadsheets to make sure you're comfortable with everything in the beginning. So now that you're happy with the numbers, you and your realtor are going to be going out looking for homes. Once you find the right house and you have an accepted offer, then I'm going to pass the file off to Crystal. This is Crystal. So you will get calls from Crystal occasionally, and you'll get emails from Crystal occasionally. So she is a live person. I'm a live person. So that's why I want to do this video, so you know we are live people. And she will be working directly with my processor, my underwriter, and my closer to make sure that you have a smooth file transition from the day we receive your contract until the day you go to closing. So that's why I wanted to introduce Crystal to you. So again, congratulations, your home offer is accepted. Now's the time to start looking for homeowners insurance quotes. So if you can, start calling around to some homeowners insurance agents. Start with the guy who has your car insurance or your renter's insurance. Ask them for some quotes for your new homeowners insurance. Okay, so as you're buying a house, please avoid doing a couple of different things during the loan process. Please don't quit your job. Don't switch to a different industry that you're switching to a different type of payroll from being a W-2 employee to being somebody who's on commission only. Don't go out shopping for a new car. Don't go racking up your credit card debt. Don't spend the money you had set aside for your down payment. Um, don't go out omitting liabilities. If you have some liabilities, make sure that we know all the liabilities that we should know that should be on the credit report. Don't go out to Nebraska Furniture Mart and go buy new furniture. Don't go buy a new refrigerator. You haven't bought the house yet. Wait until after you buy the house until you buy those new items. If you can, try to limit the amount of credit inquiries you get. Try not to make any large deposits into your checking account because our underwriters are going to be trying to source where those large deposits came from, and that's just going to bring up some extra paperwork that our underwriters are going to be asking you for. Try not to change or close bank accounts, and please, please don't co-sign for somebody during the middle of the process. So gift funds, if you can, have gift funds sent directly to the title company. On an FHA loan, we still will want to make sure that we can document where those funds came from, so we will need the donor's bank statement. But on a conventional loan, all we really need is that if those funds are sent to the title company, as long as on the gift letter that the donor provided, the account is the same as the title company received, then that's all the documentation that we need on the gift funds. If you can, try to avoid transferring funds back and forth between different checking accounts, because all that's going to do is make us get more and more documentation to show where those funds are going to and where they're coming from. So if you can just avoid trying to transfer funds in between different checking accounts, that would really help us out. With bank statements and asset statements, our auditors are going to be asking us for all pages of any bank statement or 401k statement or any asset statement. So if you have 15 pages on the statement, we're going to need all 15 pages, because if we're missing page 14 of the statement because it's a blank page, it's going to get kicked out of the audit because we're missing that one page of that statement. Even though it's a blank page, our auditors are going to want to make sure they see all 15 pages of that statement. So I'm just kind of preparing you for that requirement. The file process, it starts off with the application online. I'm going to do a pre-approval. You're going to get your contract accepted. The file's going to move into the origination status, and Crystal's going to be reaching back out to you to get any missing documentation that we're going to get. She's going to work on the file, and then she's going to move it to our processing department. Our processors are going to be ordering the appraisal. She's going to be ordering title work. She's going to get the file all ready so she can get it over to our underwriting department. Once my underwriting department receives it, they're going to review the file, make sure it meets Fannie or Ginnie guidelines, depending on what those guidelines may be. We want to make sure that we have all the documentation. Once the underwriters reviewed the file, they may ask for some additional information. If they do, then Chris will be reaching back out to you to ask for any additional documentation that we may need that the underwriter is requiring. Once we receive that documentation back, then the processor will get that information and she'll submit that paperwork back to the underwriter for final approval. The initial closing disclosure. This is very crucial in the home loan process. We have to have you sign this at least 3 business days before closing. So we will issue these as soon as we have the appraisal, title work, and the underwriting approval. So as long as we have those 3 things, we will issue a initial closing disclosure. And as long as the APR does not exceed a tolerance of 1/8%, we don't have to redisclose, or sorry, we don't have to wait a 3-day window again. So we will get those issued as soon as we can, but that starts our 3-day clock for closing. Once we have everything satisfied with our underwriter, she believes that we've got everything satisfactory to the agency guidelines, we will get a final approval, clear to close from our underwriter. At that point, she will submit the file back to my processor. My processor will give it to my closer, and then my closer will balance with the title company to make sure that we have final figures available for the title company to provide to the realtors. She will also send documents to the title company. We will send our funds to the title company the morning of closing of that day. Funds for the title company. The title company is going to require, certified funds. So you can always send additional funds to the title company. They will refund you any overages. The initial closing disclosure, my spreadsheet, were all estimates. So if you send additional funds, just be on the safe side in case you are sending a wire that might take a couple days to get to. If you're having money from a 401k or retirement account to be sent to the title company, just be on the safe side. You can always send additional funds. That way it gets to the title company ahead of time. Any overages would be refunded to you at the time of closing. And please make sure you have a valid ID with you. Make sure your license is not expired. Make sure your passport's not expired. Whatever you're using to sign, because the title company will require an ID to notarize your documents. So we want to make sure that you have a valid ID when you go into closing. Once you've signed on the bottom line, congratulations, you are now a homeowner. Thank you for allowing Crystal and the rest of my staff to help you become a homeowner. Again, I'm Ron Cardozo with First Bank Mortgage. If you have any questions at all, give me a call. My phone number is 913-710-5626. I appreciate your time.